We are at the Piper Sandler Global Exchange Conference. This is where the heads of all the exchanges, ICE, NASDAQ, and the trading platforms like Robinhood and market makers, they all get together to talk about what's going on in trading. So let's talk to one of the leading market makers in the world. Doug Cifu is the CEO of Virtu. What are you, number 2 in the world here, market makers?
Yeah, we could say that. There. Very much.
Volatility has been low. VIX is 13. Usually that means lower trading activity, but you see all. Tell us what you're seeing. What's going on with trading right now, and what's going on with retail investors right now? What are they doing?
Yeah, it's a great question. You know, we're seeing a significant interest and a significant amount of participation in lower price stocks. And obviously, within the last couple of weeks, you know, Roaring Kitty has come back, and so you saw a brief surge of interest in GME. But really, the story in the last quarter or so has been the sub-dollar stocks. I think they're of interest to retail. They're low priced. You can buy a bunch of them. And so a significant portion of the volume that we see during the course of the day from retail has been in these sub-dollar names. And it tends to distort a little bit the overall volumes in the marketplace.
Why is there an explosion in sub-dollar stock? It distorts the volume activity, but is this related to the mini meme stock rally that we've seen? Are they sort of correlated?
No, I don't really think so. I think it's just, retail has an interest in lower price names. They're a little more affordable. You can, if you need to buy on leverage, that you can acquire a larger position. So it's always been of interest for retail investors to have that. What we've seen though is like a balance in retail flows. Where at the end of the day, the buys and the sells kind of have evened out. So definitely there's interest, but you don't have the same situation like you did in 2021, where you have these sharp movements, where you had meaningful imbalances in the buy and sell volume.
So this mini meme stock rally, as I like to call it, how does this compare to the trading activity in 2021? It seems like the reverberations are smaller than in 2021, but what are you seeing? What's the trading telling you?
Yeah, I think that's right. As I said just a second ago, the buys and the sells are more balanced than they were in 2021, and the reverberations, as you put it, to other names, other meme type of names, have not been as pronounced. So you saw a little bit of a bounce in some of the other names, but it hasn't rippled through to 20, 30 names like it did in 2021, and it has not, to date, been as sustainable.
And why is the reverberations smaller? Are the people who participate in this smarter and wiser? Are they moving on to AI stocks? Or why is it different?
Yeah, I think people learned lessons in 2021. I mean, there's always the periods of exuberance, and then these stocks tend to come back to real value. And so people that buy at these highs, have a trading loss and a bad result. So I think people learned that the highs don't always maintain. And so therefore, they're a little more cautious about getting in.
One of the big topics here is artificial intelligence and how it's affecting trading. I've been on your desk. You literally employ rocket scientists on your desk, physics geniuses I have met on your desk, code writer geniuses to write stocks.
Yep.
How is the advent of AI going to affect how trading and particularly algos work? You employ algorithms in your trading patterns. Will AI hurt or will it help the average investor? How is it going to be used?
I think ultimately it's going to help the average investor. There's a lot of what goes into our business, as you said. It's obviously based on millions and millions of lines of code that can be kind of rote, can be kind of redundant, et cetera. And AI and machine learning in particular allows us to scale and to be more efficient about what we do. Right? As you said, we've got rocket scientists, and it's hard to find the great rocket scientists. And so if you can leverage their genius and their excellence and their abilities by applying AI and machine learning to algorithms and make sure that the algorithms are responding to the market real time, the markets have become so sophisticated, so intelligent, so fast that humans intraday are really more risk managers than they are traders. And so the algorithm needs to be responsive to inputs in the marketplace real time. And that's where machine learning is so important to what we do.
All right, I want to bring in my colleague. Scott's got a question here. Scott?
Hey, Doug, it's good to have you on our program. Congrats on the Panthers, too. I know you're a minority owner with that franchise, so we'll see what happens in the Cup. It's interesting that we're having this conference on a day where we are talking about the potential of other exchanges. I know you probably saw the article about this Texas exchange that is I guess, in the making. It's said to have raised $120 million from firms and individuals, firms like Citadel and BlackRock. Has Virtu invested in this new exchange in Texas?
We have not. We definitely spoke with them, and it's a credible bunch of folks. And I would never, BlackRock and Citadel are wonderful firms, and we encourage competition and evolution in the markets, and so we think it's a good thing ultimately. But as you know, it's going to be a tough road to hoe in terms of listings. There's a long line of competitors that have tried to compete with New York and NASDAQ when it comes to listings, and that's a real difficult challenge. It's a scaled business ultimately at the end of the day. And like we're listed on NASDAQ, we pay a modest amount for our listing fee, and we get great value. And so we're very happy as a listed company on NASDAQ.
Interesting. So you looked and you passed, it sounds like, as an investor. It also seems as though you're suggesting that you don't think this could be a viable alternative to either the New York Stock Exchange or the NASDAQ.
Now, Scott, I didn't exactly say that. I said as a trading venue that they'll need to innovate as other venues have. I think as a listings venue, it's going to be a challenge. I mean, IEX, for example, very publicly tried to become a listings venue. They spent an awful lot of money on it. I think they got 1 or 2 or 3 names. I mean, ultimately, New York and NASDAQ do a wonderful job for their listed companies. They have different models and different value propositions. We choose to be on NASDAQ. But at the end of the day, it's very difficult to supplant the value that they provide for the cost that they charge.
One of the suggestions in the article today, I'm sorry, Bob, was that the regulations by the New York Stock Exchange and the NASDAQ are described here as being, quote, too onerous. Do you share that view? Does that play into where this whole thing is going?
Yeah, I mean, I think there was a certain sense that maybe NASDAQ went a little overboard in some of the, I'll call it woke type of suggestions that they had for corporate boards and whatnot, and perhaps the worm has turned. I mean, at Virtu, that's not an issue for us. We're very comfortable with the listing standards. I mean, the one thing actually on the other side is that there's been a fair amount of criticism. Bob and I were talking about dollar stocks. And so NASDAQ tends to list a lot of these lower priced, smaller cap companies, and there's a question as to whether or not their listing standards, frankly, are not arduous enough to permit these companies to remain as listed public companies, or perhaps they should be kicked off eventually.
But to be sure, moving to Texas does not change the regulations at all. The SEC does not have a different rule if you move to Texas.
No, but they're creating they can create their own listing standards, their own listing protocols, right? New York and NASDAQ have very different standards. Right. We're subject to NASDAQ. New York standards, or as I just indicated, are a little higher when it comes to maintaining like share price and all those kinds of things. So where they end up there, I don't know.
This may not be so much about wokeness as it is about competing for the very lucrative listing business. And the NYSE and NASDAQ has a monopoly. Everybody else has failed against them.
Yeah, well, it's a duopoly. So they do compete against each other. And I think they have very different value propositions. I mean, New York has the humans and the DMMs, and you can go ring the bell and all the wonderful things that do. Lynn Martin does a fantastic job. And NASDAQ, from our perspective, that's where we list. It's a little cheaper, and they provide a lot of corporate services as well.
I got to let you go, but one quick question. AI, the viewers keep asking me, when are they going to have AIs that can trade stocks for them? Would that give them any competitive advantage at all?
No, because at the end of the day, it's going to become commoditized like anything else.
Yeah. Good point. All right. Doug Cifu, thanks very much for joining us. Always a pleasure.